So welcome. Thrilled to be moderating the panel on AI and the future of capital allocation, a topic that I would say is no longer futuristic. It's now reshaping how capital flows, who gets access, and what the rules are in the investing game. So I am delighted to have three very esteemed panelists with us today. So starting with Katina Stefanova, who ran a hedge fund in systematic macroeconomic models, created customizable portfolios for family offices and institutional investors in energy, healthcare, and finance. And she is the CEO of Marto LLC. She also founded the organization after leaving Bridgewater Associates. Ryan is a rare triple threat. He holds a PhD in applied mathematics focused on financial contagion. Yes, the kind we now see amplified by AI. He's been a credit derivatives trader in Europe, and he helped shape the UAE's regulatory approach to fund authorization. Today, he leads Neovision Wealth, a cutting-edge platform using AI to think fund architecture from the ground up. And Sasha's story reads like a sci-fi novel. He led space computing programs in the Soviet Union in the 1980s, launched the world's first commercial Wi-Fi implementation in the 90s as well, and built 5 high-tech companies, and now runs Almaz Capital, a venture fund focused on tech with teeth. He knows better than anyone how emerging technologies go from labs to capital markets. I mean, without further ado, what an esteemed panel that we have today. Please put your hands together for Ryan, Katina, and Sasha. So, Katina, how is AI challenging and enhancing the traditional role of human judgment in capital allocation?
Thank you. Excellent question. I guess I'm competing with ChatGPT already, since ChatGPT just answered that question. I think the biggest impact on investing, if you look at it from a big picture perspective, is going to be that the cult of the individual portfolio manager, or CIO, is now very much in question, because it'll take a lot more than just individual judgment to make investments and create portfolios. So what does that mean? Some firms, including Bridgewater Associates, Two Sigma, et cetera, have been investing in a systematic way for a very, very long time, looking at fundamental drivers, correlation, the understanding of how do you create portfolios or invest in particular investment ideas in a systematic, repeatable, and predictable manner that doesn't require human judgment, or doesn't require discretionary judgment, is probably a better way of saying it. AI takes that to a whole different level, because the difference between AI and systematic investment is that AI actually does not provide transparency. We don't know how the machines will be making the decisions, because technically at that point the machines are smarter than the humans. Giving up that agency is going to be a very interesting philosophical shift in investing, or pretty much in any kind of scientific research.
And Katina, can I just bring in Ryan on that thread, actually, because we talked a little bit about this. So where should we draw the line between statistical edge and human instinct, in your view?
That's a very vast question. So basically, AI is a machine. It's based on input. We feed it input, it processes, and then it gives you output, right? The big difference with humans is intuition. It's flair. It's something that a machine can never have. So imagine if this whole room of individuals all were brought up in exactly the same home, went to the same school, lived every single experience in exactly the same way. Their reactions most likely will be quite similar. And this is what AI is today. It's based on a data set of historical data that is being fed into this machine, it's processing it, and then it's giving you an information. Now, this output is probabilistic. It's very important to know that ChatGPT is a probabilistic modeling system, because it's based on something called neural networks, okay? So what it's giving you, what is the most likely answer that it thinks is right. And this is why, in many cases, and I'm sure many of you have tested it, ChatGPT gives the wrong answer. And even sometimes it lies. I'm sure you've experienced that. So this is the difference with humans. We humans do not only base our decisions on input, on facts, we use our reasoning. So imagine, it's terabytes that's going into ChatGPT to give you a piece of information that is that big.
Sasha, you've built things from scratch. Do you still trust gut instinct?
Yeah, so of course, we put everything on our judging, our intuition. It is how we operate. I will start that possibly half of people who are sitting here will not have job in 10 years. Yes, so, and since point is simple, we speaking about data. So it is, I agree with you that we process data, but we process a lot of data through AI. And more important still, it is a work, what is work left for human, it is to train AI. So we need to look to AI as a, I don't know, screwdriver in the process of doing something. And you becoming more experienced and more like, well, actually operate much better and more precisely with AI. So, but we cannot rely on it since each one will train the system for himself. So it means
Sasha,
that experience.
Absolutely, and you've been, you're known for spotting transformations in the industry, right? You get there before anyone else does, so you transform tech before even the market does. How is AI helping or changing some of that for you? How do you source deals today? How do you vet founders? How do you find the right conviction at Almaz, for example? Is it real edge or is it just a buzzword still in pitch decks?
No, it is not buzzwords, since you are going to scoring companies right now with AI. So it is initial scoring, of course, but more important what I see is that you need to follow it. As many investors, it was before they told they spray and forget and pray. So, but the point is that you need to follow your companies, and AI giving you ability to monitor it more precisely that can do humans. Since humans don't have such an amount of time, what computer has, and not such a speed. So, by this way, I can score and continue to score my portfolio against competition and everything. It is where I get them. But first one, which I like, is since I, didn't like two kinds of people. I like them, but I don't like professions. Yes, so it's lawyers, and the second one, it is salespeople.
As long as you didn't say consultants, we're okay.
Yeah, so from this perspective, AI, for example, through Anthropic, completely eliminate for me very difficulties with long legal documents. It is where I help in a lot, immediately for venture capitalist guy.
Ryan, you literally written the book on financial contagion. I mean, what do you say? What do you see in AI-driven investing at scale, and what triggers the next flash crash for you?
It's basically, a few years ago, I'm sure all of us heard about big data. It was all about big data, right? So the big data preceded what AI is doing today, which, as mentioned, it's processing this big data. We did not have the processing power or the models to do it until now, and now we do. So.
But has it reinforced herd behavior in your view?
So I was going to get to that. So basically, because it's getting exactly the same input, and it's giving exactly the same almost output to everyone, yes, there is what we call clustering. So this clustering, we've been seeing it over the past few years already, because most of the passive ETFs, or algorithmic trading as it's called today, is causing what? Flash crashes, because everyone is on exactly one side of the trade and pushing because this is what the algorithm it says, and everyone follows the algorithm or the black box.
How do you deal with that systemic bias that sits under that radar?
Well, this is where it needs to mature. This is where we need prompting engineers, people who are specialized in dealing with these AI models in order to prompt it in an adequate and proper way, so it gives good information in a granular way and not homogeneous across the whole data set. And today, there are university programs that are doing that, where they teach you how to prompt AI.
But you've seen literally the other side, right? So we know that there's a huge issue with regulation and AI in the UK and Europe. But you've been a former regulator.
Yeah.
How worried are you about it? What do we do about the blind spots, around current policy, for example, globally?
So regulator will always be behind the curve, always, unfortunately. Okay, the regulator is always playing catch up with the industry. So as long as the regulators do not equip themselves with the same tools that the industry is using today for investing, the regulator will remain behind.
But Ryan, it's a real issue, right? I've got a 9-year-old You know, I've been looking at schools, secondary schools in the UK. Everyone is grappling. Teachers cannot grapple with AI and what it's going to do for education today, right? We are so behind the curve. How do you deal with that? I mean, just outside of financial services for a moment, it's a systemic, cultural, societal issue today.
Yes, and it already happened with the internet, where between the previous generation and ours, there's a disconnect, where the previous generation doesn't know how to use the internet, an app, check in online, and do all of these things, or struggles with it, whereas we do it so naturally. And this is where the disconnect happened. Now, with our generation, it's happening with our children, where they're doing things so much faster with these much faster tools, and they're doing it intuitively.
So in your view, is there a way of dealing with this, regulating without stifling innovation?
Unfortunately, there's no easy answer, and my answer is no. There's no way to do it. We'll have to accept it just the way we accepted it with the Industrial Revolution, then with the internet, and now with AI. We will have to accept it. There will be accidents, and these accidents will lead to regulations, and the whole thing will get organized as always. This is how we humans evolve.
So Sasha, given what you do and the modelling that you do, Katina, the modelling that you do, AI relies on data. What if you don't have the data?
Then you have to buy it and get it. It doesn't work without the data.
Can we responsibly use AI in frontier markets, do you think, Ryan, with thin infrastructure?
Absolutely not. And I'll tell you why. Because the way neural networks function, it's based on correlation. It does not compute causation, causality. Causality and correlation are two completely different things, as we all know. Neural networks only functions using the principle of correlation, because it's a pure mathematical model, whereas causality is not a pure mathematical model. And this is why in frontier markets, I think it will be very hard, and it will make a lot of mistakes.
But it's place for humans, anyway.
Exactly.
Yeah. And so, Sasha, would you say that they're leapfrogging opportunities that you're seeing in data? Poor, well, essentially the data is poor. You're seeing opportunities being leapfrogged, but innovation-rich regimes.
One more time, sorry.
So are you seeing a leapfrog of some of these behaviors? So the opportunities that you're seeing as you think about tech before it comes out in the market, are you seeing it in data-poor but innovation-rich regimes or regions as well?
Yeah, it is. So the point is that, of course, we have to make right decision. We need to have a lot of data. It is collecting experience. It is a database on what? On experience about input, which we are getting to information. In many places, it is not available. It is not experience like not centuries experience of UK about law, for example, in many places, or not centuries of something else. Now it's not centuries, it is 10 years, 5 years already important. In some region, it is given the ability to work with small amount of data as well to make the right decision. It is where I see also the next steps for AI, yes, which is brilliant. Since we're still thinking about small model. So I would like to have everything to see. It is our industry is industry. It is every industry will be disrupted, and the same way. So early or later. So from the perspective of this, your question, yeah, it is given opportunity for small countries or emerging countries to decide something more faster. So to learn more faster, to get more better experience more faster. It is where I see there also one more tool of result of AI, which is brilliant to us.
So Katina, do you think that AI is leveling the playing field for retailers, for smaller investors, or is it just another moat for those who've got better data or better access?
Absolutely. I think we will see a massive democratization to expertise. To Sasha's point, now you can write the legal document without being a lawyer.
Not to write, to review, to review.
It needs to be reviewed, but it happens.
Very boring reading, it is reviewed.
And to Ryan's point, now basically understanding concepts such as correlation, volatility, and how that works over time, as long as you have access to data, can be done by retail investors, by 21-year-old college students, probably better than some of the top investors in the world. So what's left for us? I still think that what's left is that human judgment of where the blind spots are.
So do you think it's pushing towards better inclusion?
Absolutely, yes. Although I don't agree that jobs will disappear because of that. I think new jobs will be created, and how we operate, how we interact, how we do any kind of business, currently we lack the imagination to see the various models that are going to emerge, particularly investing, because that is our area of expertise. I've been speaking in these conferences for years, and for a while we didn't see the emergence of crypto investing. It came from left field. I've written a lot on disruption in asset management. I think AI is going to be much, much bigger than that. And the internet, to your point, Ryan, is a great comparison. However, I think the change here will be exponentially greater and faster. So I don't think any of us are really experts. The experts.
So Ryan, do you think that Neovision and platforms like Neovision will make things fairer and smarter, truly fairer and smarter for the rest of the world?
But that's precisely what we're trying to do, which is work with the smaller data set possible, process it to give the best output possible. Because it's all about the data that you bring in and the complexity of the model. The more complex the model is, the less input it will need and the better quality the output will be. The variable here is the human factor, which is the prompting. Without prompting, none of this is possible.
So then in your view, Katina, what does the next gen AI profile look like?
Yeah, generative AI. We haven't gotten there yet. And from my perspective, as someone who has looked at systematic models for a couple of decades, the problems with modeling is that you always relate or depend on historic data. And when you look at correlation, you look at historic data. The problem is that those relationships between the data, they're not stable. They change based on fundamental drivers. The fundamental drivers change, the correlations change. Therefore, it doesn't really work for portfolio construction in emerging markets or in a world that is highly unpredictable. And right now, the world is highly unpredictable because of technology innovation. So hopefully, I don't know if it's going to happen or not. Probably it will, because technology develops. AI will be able to generate proactive, forward-looking understanding based on information that is not there yet. That is the holy grail, and I don't know how far we are from that. Maybe Ryan can tell us.
So Ryan, if you were hiring a portfolio manager today, what's the #1 capability or skill that you'd be looking for?
In the coming future, it's I wouldn't call this person a portfolio manager. That person would be more a prompting engineer, plus some intuition. And let me give a small example. We'd do the whole analysis about how to position. We'd be ready, we'd be sure, and then President Trump makes a tweet that destroyed the whole analysis, right? This is where the human has to intervene, adjust, recalibrate, and have a plan B.
Fantastic. And Sasha, what capabilities are non-negotiable, in your view, for a VC or a founder in this new era?
I really don't know.
Any thoughts, Katina, Ryan?
I mean, what I would like my children or our children to be like, to be successful in the future, which means also a founder of a company, adaptability is more important than ever. Basically, the more we realize we know nothing, the more likely, and any founder of a company is more likely to adapt to all those changes, plus the normal perseverance, grit, all the stuff we talk about. But adaptability is more important.
No, it is an important comment. Of course, we live in changing, so it is like we live with age of electricity or something for a long time, yes. So, but now I bring into us model to people to think. Actually, it is very good exercise to people to read more and to see that how we need to be adopted, but also to ready to change ourselves. This is what I learned to teach in my kids. They cannot stay anymore long time thinking that it is forever. So they need to be ready to be adopted for life.
So if you fast forward 5 or 10 years, Ryan, does AI tilt the scale towards passive investing, in your view, or do you think we'll end up just developing better strategies and tools?
Passive investing is already the majority of investing today, unfortunately. And this is what's creating this herd push.
Do you think it will tilt the scale on further? Or?
Absolutely.
Yeah.
And look at the recent rally that happened on the US stocks. It was mainly driven by retail investors, whereas institutions were selling.
Yeah.
Where the whole ecosystem is telling you sell stocks, don't buy stocks. All of the retail investors went ahead and they bought. And this is, yes, this is quite concerning.
Yeah, in my life, since I'm operating on all the stages, like A, Series, or even pre-A sometimes, so it is like more active. If you're passive, you lost everything. So from this perspective, I think that it is a problem, right, with today venture capital, since too many people gone to passive. And they're not actively involved and not predict. I can predict, it is, I'm for sure. You can judge it is right or not, but it is given for you a lot of questions. What you do think about next step with the company, what you need to do with the company, what's surrounding of the company. It is completely changing landscape, and many people will move to more active role, I think.
Fantastic. Thank you so much to our three panelists today, Katina, Ryan, and Sasha.